pleased to see a much more open and accessible, and to know that accessibility is one of the key elements of the expanded library plan, because this building is just so difficult for accessibility. Even if you were to retrofit this building, its basic design is difficult for
the
everyone.
intent is that everyone comes through the same door and goes through the same efforts to get in. Having to go through 60 feet of ramp and around the corners and inside doors and stuff isn't really the intent of creating a second-class way of entering the building.
Right.
The new building will take care of that. Now, one thing we tend to forget about is the drive-up service window is a huge part of that, because there are some people, it's much easier for them to come through that window than it is to get out and go through and into the building too, so.
Other questions or observations about building expansion or informational campaign otherwise? Let's move on to new business. Excellent. So, new account for property tax direct deposit, and our guest
And our
bankers presenting
Our first is,
First Midwest.
we have
Wonderful, thank you.
Susan Wade and Anna Warren.
And
Each of our bankers has been asked to talk about their, the account options that are available to us, and any fees that would be associated with those accounts, and the rates available. These are, all four of the banks that we're talking to tonight are all local banks: First Midwest, First Community, Wintrust, which is Plainfield Bank and Trust, and then Heartland. So we are looking for an established relationship and a bank that has a relationship with this community like the library does.
Julie, would you want us competitors to exit, or are you comfortable with having all of us here at the same time?
It's a public meeting. I think the one difficulty with this process, with not being able to do the RFP and do a committee of the whole to meet with the individual banks, is that we're kind of all thrown together.
so we appreciate you all working within those strictures. Thank you. All right, welcome, First Midwest Bank.
Thank you. Thank you for having us. My name is Susan Wade. I'm the Vice President with First Midwest Bank, and I manage the Public Fund Banking Group for First Midwest Bank in the South Cook, Will County area. Kind of give you, my colleague Anna Juarez is
the branch manager at the Plainfield main location. I've been with First Midwest Bank for 14 years. Just moved to the Plainfield branch about a year and a half ago. But I started off as a teller and moved my way up. So I've gone to different locations. I've seen different communities, been involved with different communities.
Great. Well, welcome.
Thank you.
Thank you, and thank you for your business. We have been your bank for 46 years. So I'd like to thank you all on behalf of First Midwest Bank. Are you all familiar as to why we're here discussing the issues with Illinois funds, other than just the basic?
In general, yes, because they've changed the way in which funds can be deposited. Yes, now we have to explore different options, and so you're going to tell us the ways in which you can accept those funds.
Absolutely.
And what the different rates, fees, et cetera, will be.
Right.
Okay.
Illinois funds made a change from going from Chase Bank to US Bank. They went essentially from the banking side of the world, crossed that little Chinese wall, and went into the trust side. In doing so, that eliminated your traditional bank abilities, writing checks off of it, making wire transfers into it, and so on and so forth. So I will start off our presentation. I hope. Okay. So the group that I'm in is, as I said, I'm in the public fund banking group, and all that I do is bank municipalities, school districts, park districts, so on and so forth. Between myself and my colleague, we have over 40 years of combined of doing this type of banking. I started out when I was 3. And we really in the world of this type of banking, we are both Nadine and I are considered to be some of the few experts in Illinois in this field. I'll get on to that kind of turned out a little bit funny. We have a relationship team approach where I support the local branch managers. So where Anna has all the activity where she's involved in, attending events, chamber events, working with the park district and the village and all of that, and I support her and support the clients directly. Julie and I have worked on several occasions specifically for the library. And then we have a team of dedicated professionals called the Treasury Management Client Service, and between the three of us, they manage kind of the day-to-day type issues that would come about. The three of us, in turn, are your team and Julie's team. This is, maybe you guys can read this a little bit later if you care to, kind of some background on all of us. A few little highlights for me. I have a degree in political science. I wanted to be a lawyer back in the day. I ended up kind of falling into banking because I always had a nose for numbers. So the position that I've had for some time has really kind of balanced out my love of banking numbers, my love of the government, and it really kind of gives me some great exposure. Personally, I sit on the City of Naperville's Financial Advisory Board, so it's something that I love, something that I enjoy. I love sitting on that side of the table. Sometimes that side of the table versus this side of the table is easier. But I eat, live, breathe this. I'm a member of Illinois Library Association. I was down in Peoria this fall. I do the Illinois Association of School Business Officials as well as the Government Finance Officers Association. So the way that I view it is I'm really here to help support you. I came up to Julie at the chamber event, the State of the Plainfield event, and I said, we need to kind of sit down and talk about changes that are happening in Illinois funds, and she said, oh, no. I have a referenda to deal with right now.
Yeah.
And I said, yeah, but maybe we should, at least put it on the back burner, but not too far. And 2 weeks later, she called me up and she said, okay, we need to have a little talk. So that's my job, is to know what's going on in the public space, and in turn to bring it to her, and hopefully then to turn around and bring it back to you. Anna gave her background. She's been with First Midwest for some time, branch manager, and she's down the street out in Lockport. So, our clients in treasury management, public funds, as I mentioned, libraries, townships, counties, a little bit of everything. And I've been busy for the past 3 weeks coming to board meetings for libraries and townships, because
I would guess these changes have affected you for lots of clients.
Typically, December, January, and February have been always slow months. Those are the planning months where everybody's kind of figuring out what's going to be happening over the course of the year. And it's been, I told Julie, 1 to 2 board meetings almost a week for me in the last few weeks. So, the funds that the way that I'm proposing your funds to be invested are in compliance with the Illinois Public Funds Investment Act, in which they currently are. We have a third-party collateral agreement with Bank of New York, and we have a document that's signed between Bank of New York, the library, and First Midwest Bank. So as the deposits that come into the bank from the county and from other resources come in and get credited, we pledge collateral into the Bank of New York account on behalf of the library. So in the event that something were to happen tomorrow, the bank shuts its doors, you could pick up the phone, call Bank of New York, and those funds, those investments would be liquidated on your behalf and would automatically be transferred to the bank of choice at that point in time. So the first $250,000 is collateralized, and then everything over and above, I believe your policy says 103% would be collateralized in excess. The way that we have our agreement with Bank of New York is you have unlimited collateral. So we settle everything on a daily basis. So instead of telling me that you're going to typically keep about $3 million in the bank and we pledged $3 million worth of, or $2,750,000 in collateral, we actually settle the account at the end of the day. So as your tax payments are coming in, the same day our collateral is being increased with every dollar that goes in. So you don't need to put a limit on it. We don't ask that you limit it to only, $4 million in deposits. It is completely unlimited to you.
Okay. Which is important with the referendum coming up, unlike a standard tax receipts only client.
And we recognize, you're gonna get your 2 bumps in the spring and then at the end of the summer with your tax payments, and as
Right.
those kind of get liquidated down, we wanna release that collateral as well, so we'll turn around and release that as it need be. So on access, you'll have access online if you request it. I don't think at this point you do have access, but if you want, you get a month-end statement. All of this, as I mentioned, is in compliance with the Public Fund Investment Act. All of this will also get you a very clean audit. Out of the clients that we manage, there's 3 different levels of audit 3 different levels of collateral that you'll see in your audit. The first one is a third-party agreement with investments pledged specifically to the municipality, and that's your level 1. Level 2 is pooled collateral, which is your second level. You're not as clean. Your dollars go into a pool, collateral dollars go into a pool. When the music stops, hopefully there's enough at the end of the day, that's your second level, and then the third level is uncollateralized funds. The way that we are recommending is fairly similar to what you have at this point in time. We are going to recommend that you open up a new NOW account in which funds will be deposited into. That is where the bulk of your tax dollars will go. The interest rate on that NOW account is currently at 0.09. It will change as the rates go up. It's a fluid rate. It's tied to the economic markets. It's not tied to anything. It's a bank set fund.
Okay. So not tied directly to the Fed?
Correct.
Individually, okay.
Correct. Then in turn, we have a checking account, which is where all of your deposits will go into, all your checks will be written out of. And with that account, we're asking that you keep $250,000 in non-interest bearing funds, and with that, you will continue to maintain the no-fee relationship that you have with us. So what we're offering basically is a no-fee checking account with everything over and above the $250,000 at a rate of 0.09%. Some of the benefits, first and foremost, safety and security of the taxpayer funds. As I mentioned, it's collateralized in compliance. Your existing structure earns the library a clean audit when it comes to your annual audit. And maximize your interest earnings on a NOW account. Interest rate, like I said, is at 0.09. And you will continue your no-fee relationship. The automation of an account sweep, you will literally have it's a no-brainer type of an account. You don't have to do, Julie doesn't have to do any day-to-day management of this account structure. And then I just added in, I took a look to see, you may be interested in looking at some purchasing cards for the district. And one thing to think of, especially with when, I want to use my terms right, when and if the referenda comes through, you can look at making some payments on a purchasing card and earn rebates that could come back to the district.
Okay.
And that is a no-cost option as well. Should you
How is
choose
that secured then?
the credit card?
Right.
It's unsecured.
It is, okay.
We would work with you to figure out what the limits for the card would be, either from global, like all the different cards, if you were to have multiple cards, or if you were to just have 1 or 2 cards. And we could set up a limit for each individual card,
Okay.
or 50,000 between the 2 cards.
Sure.
It's kind of like an umbrella.
Okay.
Should you choose to take the next steps with us, We try to make it as easy as possible. We'd obviously have to open up a new account, so we would have new signature cards. And you would need to contact Will County to change, I couldn't remember, have you got DuPage also? Kendall. So you need to contact Will and Kendall, just to change the place of deposit for your funds, for your tax funds. And then we'll take care of the rest. We'll make sure you're in compliance with everything that's been proposed tonight.
Thank you.
And then I put some information on the corporate credit cards in the back. And as I said, thank you. 46 years, nice long-standing relationship.
I'm glad you looked that up because I had no idea how long we had actually been with First Midwest. They had predated me long enough that I was not sure what
You were in
that date
preschool
was
with
even.
me, Julie.
Not sure what date that even was.
Probably not. Questions? Anyone?
Questions for First Midwest? All right.
Great.
Next
Thank
up,
you
First
so much.
Community.
Thank you.
I don't have a TV show. Most of you know me, or a lot of you know me. I'm Greg Schaefer. I'm with First Community Bank. I'm the market president. If you choose to move our way, I'm your contact. Specifically, I brought Kristen Enza along. She's our treasury management person. She understands how our structure works. She understands collateralization. She's the head of our treasury management division at First Community Bank. Our bank started, a bunch of businessmen in Will County decided that they wanted to get back to the basics of community banking. 12 years ago, we've now grown to 6 branches in a multi-bank holding company. We exceeded $1 billion. We're well capitalized. We're what the regulators would consider a well-capitalized organization with a 15% capitalization rate, just about right around there. There's a whole lot of information in this proposal, most of which I'm not going to cover, but I thought it was important that you understand where we are as far as financially, as well as how we plan to handle your deposit with First Community Financial Bank, as well as how we would secure it up. I'm going to leave the details up to Kristen on that, and we'll get back to that. I guess maybe you might as well go into that.
Okay. So we have a couple of different options for you, so I'll outline each of them, and then if you have any questions, of course, the funds, both structures are conducive to public funds. We also have public funds clients as well that we work with, so we're more than familiar with this situation and the federal requirements that you need. So the first idea or proposal that we put out there is we would open a money market account for the funds to go into. As far as collateralization for this, we are able to provide you with a Federal Home Loan Bank public unit deposit letter of credit. So basically, we pledge our amount of our assets for the amount of your deposits. The Federal Home Loan Bank would issue you a letter of credit. So in the event of a bank failure, the Federal Home Loan Bank would provide you with the funds. So basically, we're always monitoring, so we would set a limit, so whatever you're anticipating your high to be, that's what we would get the letter of credit for. It is, in the event that your balances exceed that, it is adjustable. We could get an additional one, but we do look at it on an annual basis, so if we need to increase it or bring it down, we can do it.
And we would need that flexibility again with the referenda funds coming in and then going out. You know, we don't need a huge gap permanently, but it would be a little bump.
Exactly. And it is, Liquid, the funds are liquid, it's a money
Okay.
market account, so you have access to them as you need them.
Great.
It's pretty simple, not complicated.
Mhm.
There are minimum requirements or maximum requirements on a money market account. In any money market, you got a limitation of 6 transactions a month.
Six
Okay.
debits a month, yeah.
Okay.
The rate that we're offering on these balances is 0.38%. If you wanted to access it through online banking, you would have the ability to do so. You would get a monthly statement as well. And as far as audits, you just have the Federal Home Loan Bank document that states that your funds are collateralized. You don't have to worry about securities, CUSIP numbers, and at the time and the fluctuations of your balances.
Okay.
So that's option number one. Any questions on that before I move to the second option?
So, anyone? No? Okay.
Okay.
Great.
And-
There had to be more than 6 deductions.
Pardon
No,
me?
not, you said there were, the limit was 6
Six
deductions.
debits a month, yes.
I said if there had to be an additional debit because something else was going on, if indeed we are in its instruction.
It's allowable, definitely. If it's going to be, more than that, then we would obviously want to talk about a different account type. I know from my understanding and when we were talking to Julie, that wouldn't be necessary, but we can definitely, if that comes up, we'll work with you on that.
This is more of a cash concentration account. If you need it or want it, we could also send you up with an associated sweep or whatever, whether it be more transaction.
And then the second option is we are part of the Promontory Interfinancial Network. And so what that is a network of financial institutions that are credit rated, so they qualify to be part of the network. So we're able to take funds in and then we place them into the network. So if you have $4 million, that will be in the account. 249,000 will be placed with multiple institutions until all of the 4 million have been placed, so that it receives full FDIC insurance. So how that works, you have us as your one bank. We provide you with a statement every month, and that statement would outline where your funds are and how much is placed, so that you're never above that FDIC limit. You can, if you have funds at other institutions, you can limit so that you never go over that 250,000. As far as accessibility to the funds, it is next day availability. So if you needed access to the funds, you would get them, you'd notify us, and then you'd get them the following day. So basically, you'd have a shadow account internally with us, and then as you need them, we would pull them back from the Promontory network, and then you would have access to them. It operates the same way as a money market account. It essentially is. It's called an insured cash sweep account. So it does earn interest. The interest rate is a little bit lower because we are paying for the FDIC insurance. So that is a 0.25% APY. You would have online banking access, but it would be through a separate site, separate from First Community, but you'd be able to see the balance at all times if you needed. And there are no fees for either of those accounts.
Okay.
Any more questions?
How long have you offered something like the secondary option? Has that always been a part of the program?
You know what, we, with kind of the history of our bank and how we started, we had 4 different separately chartered institutions before we became one, and one of the institutions has offered it, and I believe they've offered it since the beginning, about 7 years. So, and again, it's a great program in that the banks that are part of it are credit rated as well, so.
Any more questions on the account or the bank?
You say we have access to knowing what's in our account all the time through a separate site. Now you say the money would be placed in several different banks at the 249, 250 cap.
Yes.
Is all that gonna be, our balance is gonna show it just as one, or are we gonna have
Exactly.
balances
No, you
How
know what,
much debt there are the
your
banks?
statement will break it down and it will show you what your balance is at each of those institutions and what those institutions are, but as far as you're concerned, it's one
We
account
have
and
one.
one balance.
And in simplest terms, what happens is we're trading dollars. So First Community Bank still has a $4 million or $4.5 million balance or whatever. They share with us, we share with them, so we share each other's FCIC. We pay for that, but that $4 million or $6 million, whichever in your account, is available to scoundrels like me that, I've been a commercial banker for 38 years. I make loans, and that's what we do. We lend back into the community, and that's what we're gonna use your money. You know, so, and that's how it all works. The first program, it's a no muss, no fuss, it's pretty simple. It's a pretty good rate. I think it's even better than what you've been getting in the Illinois funds. You're gonna be able to access that. I mean, I don't see that you're gonna be doing a lot of transactions every day out of that account. That account will be used more or less, like I said, a cash concentration account, and once a week, Julie or somebody's gonna pay some bills or know what bills gotta be paid, they'll do one transaction out, put it in wherever their checking account, and we'd love to have that, although I know you've got your checking account at your 46-year relationship. But, you know, we're a full-service bank, and we'd like to do this piece of business to get started with the next thing down the road with you.
Are you exploring these options with other municipalities or public institutions since this change has occurred?
This is the
You are
first,
exploring?
this is the first entity that we've been approached on.
Okay.
Yeah, no. Have we provided this product? Yes. I mean, this is something that's been well received throughout our whole company as far as the federal home loan letter of credit.
Okay.
And the nice thing about it, even with the FDIC program, you gotta deal with the FDIC working through the shutdown process. If there were a problem, now, I think you'll see when you look at our financials, we're pretty solid and stable. We've grown well, but we've grown conservatively, and we got a real good capital base and profits to show it. But if, heaven forbid, something happened with the letter of credit, and I deal with these in my business all the time, with letter of credit, something happened, you make a phone call and the money's being sent to you. That's how that works.
Okay.
You know, so you're not waiting for the FDIC to negotiate transactions and find out. So, we tried to make it simple.
Since we don't currently have accounts with you, what would be the setup and transfer process?
Absolutely, so we would just need to know, first of all, who the signers would be on the account. We'd establish the account, we would need, you know, the copy of the driver's license, all the information that
Right.
is required of the signers.
Right.
We'd produce the documentation on our side in turn that you can review and sign.
Okay.
For the Federal Home Loan Bank letter of credit, we do all the setup on that, so we work with you to figure out how much that letter of credit should be for.
Okay.
We work with the Federal Home Loan Bank to establish that, based upon who the main person would be for that from the library. And then basically, it's as simple as that, they will mail you the document that you need to retain, and we'll also have a copy of it.
All right.
From the Promontory Network, the ICS account, it's very similar. We have to open an internal shadow account so that you can transfer to and from. So in this case, when you transfer the funds to us, we would then transfer it to the Promontory Network. So it's just an additional step.
Okay.
But there would be an agreement to go along with that, but then we do the setup for it. So
All right.
both simple, very simple processes.
And with the letter of credit, we get a sense for what you think the maximum's gonna be.
Mhm.
We don't set it at that number. There'll be a margin.
Some cushions, okay.
Yeah, the other
I mean, we
thing,
have a pretty consistent history of inflows and outflows, so we'd be able to establish that within a good range.
the other thing you'll find in the bottom of that package when you finally, if you can't sleep tonight, I included a program that we offer to many of our good business people. It's called Bank at Work. And my personal bankers would come here, and if you've got employees to be interested in taking advantage, it's kind of a human resources thing. You know, there's benefits for them to bank with us. We'd open up their checking account. If it's set up with an automatic debit, we're gonna give them a $200 credit back into their account. They can get some specials on lock boxes. They get special discounts on loans, home equity loans. The whole 9 yards. If somebody's buying or refinancing a house, we've also included in there for your employees a $300 rebate towards their closing costs if they were to apply through us for that home mortgage.
Okay.
So it's in addition to paying you some interest on the deposit, we'd like to do more business.
Okay.
Enough said. Thank you for your time.
In terms of the relationship with the county and the deposits to you, is there any particular paperwork that needs to be done for that?
No different than you'll be doing for anybody else.
Okay, okay.
We do a lot of it.
You do, all right.
Yeah.
All right. Anyone else? All right, thank you so much for coming and presenting. Wonderful.